Huge discounts in the stock market, stabilization and recovery in the crypto market, and the earning opportunities of the forex market beckon traders. Our analysts will tell you what to know before deciding to trade in one of them. So we present you with our fresh overview of the North American trading session. Greetings! Thursday turned out to be a sell-off day in the stock market. Investors have finally assessed the general prospects and, given their circumstances, have shown an adequate reaction to risky assets. On a Thursday, the main US indexes sank deep into the red zone, with the Dow Jones Industrial Average tumbling by 2.4% to 29,927 points, one step away from a bear market. The NASDAQ and the S&P 500 lost 3.3% and 4.1% respectively. Today, the indexes are trying to recover. Analysts see the S&P trading in the range between 3,650 and 3,740 points. Yesterday, the S&P lost all of the gains made in 2021. Since the beginning of the year, the index has fallen by around 23%. At the same time, the Dow has descended by 19%. The situation is getting worse globally. According to Refinitiv, investor liquidated global equity funds worth a net $30.16 billion, making their largest net selling since at least July 2020. Financial, tech and real estate sector equity funds faced outflows of $894 million, $439 million and $409 million respectively. The fall in the stock market came due to record inflation, monetary policies of the world's central banks and the growing recession risks. The US Fed raised the interest rate by 0.75% on a Wednesday. The Swiss National Bank unexpectedly announced a 0.50% rate hike on Thursday, with the Bank of England lifting rates by 0.25% on the same day. With the interest rates being on the rise, some experts suggest that the Fed could stumble at some point. Analysts at Wells Fargo think it will be increasingly difficult for the Fed to nail a soft landing. Instead, an economic recession could take place in 2023 and be more or less equivalent in the magnitude and duration to the downturn of 1990 and 1991. Disappointing housing and jobless claims data in the United States exerted additional pressure on the stock market. Today, the stock market is likely to rebound, but it's important to trade carefully in a way. The impulse may not even survive until the end of the session. Globally, there has been little progress, with the aggressive central banks hindering both economic growth and the stock market. Today, investors will also focus on industrial production data, Chair Powell's speech, and the Fed's monetary policy report. Considering the nervousness and sensitivity of the market, the brief rally of indexes may end in the blink of an eye. The US dollar index also had a hectic trading session yesterday. The greenback pulled back from the 20-year high, but not too deep, and then it rose again by 0.8%, keeping the rate steady against the basket of major currencies. In the coming session, the US dollar index is projected to be trading in the range of 104.30 and 105.25. Thursday was not the best day for the US dollar index. The jobs data and the data on the housing market in the US came in worse than expected, adding to the disappointment caused by the weak retail sales report. Today, the US dollar can boost another upward cycle and the largest gain in 30 years against the Japanese yen. On a Friday, the Bank of Japan confirmed its commitment to ultra-loose monetary policy. It's going to keep the borrowing cost at the current or even lower levels, thus choosing to support the local economy over curbing high inflation. According to Bloomberg, the difference in the monetary policies of the two central banks pushed the US dollar up by 16% to 134.48 against the yen. This is the highest rise on a yearly basis at least since 1992. The yen, which was traditionally perceived as a safe haven asset, has become the second worst performing currency among G20 after the Turkish lira. As for the US dollar, it's poised to reach new record highs. Meanwhile, the Canadian dollar keeps losing ground. The pair has reached the high of 1.30, which is not far from my May highs. The pair is expected to rise further while trading in the range between 1.2990 and 1.3080. Amid sliding oil prices, the Canadian dollar is falling together with the TSX index. On Thursday, the Toronto Stock Exchange Composite Index dropped by 3.1% to 19,004 points, posting its biggest decline since June 2020 and its lowest level since April 2021. Today, the index is slightly recovering, although the fresh data from Canada adds some pessimism. In April 2022, foreign investors acquired Canadian securities worth 22.2 billion Canadian dollars. This is less than half of the previous reading of 64.5 billion. Meanwhile, the net outflow of funds from the Canadian stock market was 0.6 billion. At the same time, in March, the net inflow of investments stood at 13.6 billion. While the foreign exchange market keeps setting new records, the crypto market rose in an attempt to gain momentum. Bitcoin is stuck in the range between $20,200 and $21,700 per token, and all its attempts to leave this channel have been unsuccessful so far. The fundamental background is not favorable as well. Today, the issue of frozen accounts of Celsius users came into the spotlight in the 5 US states. Regulators from Alabama, Kentucky, New Jersey, Texas, and Washington are concerned that such a move may threaten the financial well-being of the clients. Meanwhile, capital flow is slowly returning to the crypto market. Without a strong driver, Bitcoin may well stay fluctuating in the channel between $20,200 and $21,700 per token. A breakout of its lower boundary may initiate a larger sell-off in the crypto asset. And this is how we see the end of this trading week. It's highly possible that the market may rebound and close the session with growth. However, given the current uncertainty and overall instability, you should be very careful when opening positions. Trade wisely and gain profit. Have a great weekend and see you soon online.